world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, FinTech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by entrepreneur and innovator Dhiraj Mukherjee. Dhiraj is head of innovation at Virgin Money, a prominent UK bank and part of Richard Branson's Virgin Group. After graduating from Dartmouth College and then Stanford GSB, Dhiraj co-founded Shazam, one of the best-known apps of all time. Launched in 2002, the platform is alive and well today. Dhiraj is a seasoned digital innovator and experienced design professional, launching digital platforms around music, movies, advertising, and social networking. He's also advised on innovation for Reuters and other large corporates, and now carries the innovation flag at Virgin Money. In addition to his work at Virgin Money, Dhiraj is an insightful thinker in his own right, and it's in that capacity that I've asked him to sit down with us today, to express his own personal views on where new technologies will take us, both within financial services and more broadly. If you enjoy today's show, please leave us a review on iTunes or your podcast app of choice. Positive feedback is instrumental in helping others find the show. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you'd like to join Rebank's insider community to receive exclusive content, event information, highlights, and more, check out the sign-up page on our website. Thanks so much for listening today. Please welcome Dhiraj Mukherjee. Dhiraj, welcome to Rebank.
Thank you.
During the show today, I look forward to getting into some exciting stuff around technology and innovation and where it'll take us, both in financial services and as a society. You work for a forward-thinking bank in the UK, but I want to ask you to take that hat off today and share your personal thinking on what the future looks like.
Okay.
There are a ton of things I want to dig into today. Maybe we can start with a bit of background, because a very interesting note that people should be aware of. You founded Shazam, the world-famous song recognition app.
That's right. That was 17 years ago, so it's a long time.
Wow. It's amazing to think that, well, firstly, that it's still used. Secondly, that the technology that it was built on and effectively leveraged 16 years ago is technology that largely is used in similar ways today. It's actually interesting that it's reflective of a topic that I'm sure we'll get into, which is how do you build experiences around native components? Because in financial services specifically, we're seeing a lot of experiences that are quote unquote built for the digital age, but leveraging legacy components.
Right.
And there's, I think, absolutely a better way to do things. And I know you have views on that, so I look forward to getting into it.
Fantastic.
Maybe we can start with a topic we've talked around on the show in the past, but have never really dug into deeply, which is specifically that one, designing experiences around increasingly powerful and pervasive native components. I know you give a lot of thought to this. Where are we today, and where do we go from here?
Yeah, I think that's interesting because, as you were saying before, some of my experience at Shazam from many, many years ago, I guess is still relevant today. And Shazam was ahead of its time. We didn't realize when we set up the company in 2000. It was the early days of mobile. It felt like there was a huge amount of potential. And the service launched in 2002. But it was 2008 when the iPhone launched and the App Store launched that really the product or the service came into its own. It found the right platform. It turned into an app where people could use it seamlessly, and then that's when it really took off. But the years between 2002 and 2008 were pretty bleak because it wasn't a fantastic user experience. It was a phone call and you'd get a text message with the name of the song and the artist. But what ended up happening was that once the right elements were in place from a technology perspective, then it just made a ton of sense for users. And I think it's the same thing in financial services today, which is we are working with a set of legacy systems or a set of ways of doing things, which are just not the way the future is going to look like and be. If we start working backwards from future technologies or future experiences, you get to a very different point of departure in 2017 than you would if you say, okay, well, what have we got and what have we been building on for the last 15, 20, 30, 40 years perhaps? And I think the tension there is the future is not going to look like the past. And I see no path from the past to the future in this way. And I think that's the tension we're feeling in the industry right now.
That's interesting, that no direct path, kind of no continuous path, as we're looking at some sort of quantum leap, some sort of 0 to 1 leap from where we are today or where we were in the past to where we are in the future.
Yeah, I'll try to be a little bit more specific. So, for instance, when Shazam was started in 2000, the way the music industry worked was on gut feel. So you'd have record labels would have A&R people, so artists in recording, who would listen to bands and make a judgment and say, well, that's a great musician, we should sign them up. What's happened in the 15, 16 years since then is that the music industry has become tremendously data-driven. And you can look at digital sales, you can look at the number of Shazams and get a much more robust picture of what's going to be successful and what's not. And guess what? That's what drives the business today. And that data can be really granular down to artists who have scheduled concerts in cities and towns where they knew that they had a fan base because of the data coming out of Shazam, for instance, or from downloads. Now, if you take the same logic in financial services, so, we create so much data every single day through our transactions and our behavior. But I don't feel that data is being used in any meaningful way at all. I don't feel like my financial life is better because of the data which I've generated, but it's there and there's a massive opportunity. So if I look forward 15 years, I think the experiences in the future will work backwards from that asset of the data which we all generate and which there's value dormant in there, which is going to be released. And, we'll look back and go, how strange it was when we didn't get any information or guidance based on our past spending habits or patterns. It was so strange back in 2017.
I want to stick with the Shazam example just for a minute because I think it's interestingly representative parallel to kind of some of the conversations around innovation in financial services and other industries. It would seem like approached from a contemporary perspective that Shazam is some sort of voice recognition or audio recognition, some sort of cloud-based, i.e. not on the device processing,
yes,
which is returning a result to you.
Yes. Which,
interestingly, is, whatever the past 2-3 years, people have been very excited about other new cutting-edge, quote-unquote, apps doing. But it sounds like those technologies were available, at least to an extent, as far back as 2000.
Yeah, I think that's exactly right. So when we started in 2000, I beg your pardon, when Shazam started back in 2000, we needed to process an inbound call in seconds. And back then, computers were expensive. So the only thing we could do was to try to build an array of processors, which we built by hand. So every machine was hand built using the cheapest components available because, we didn't have a lot of money when you're a startup, in what was called a Beowulf cluster, which was headed up by a CTO who handcrafted this array. Now, that is what Amazon uses today. That's what the cloud is today. And people just take it for granted. We built it because we had no other option. We couldn't afford, the high-powered machines of the day. So you're absolutely right. It's something which is commonplace today, and perhaps it was early days back then. And in the future, I think we'll just continue to see that as we just get exponentially increases in processing capability and power. But from a financial services point of view, I still hear hesitation about data being on-premise versus in the cloud. So one lives with legacy problems, and unfortunately, those don't go away nearly as quickly.
So is that example right there, the data on-premise versus in cloud, is that a legitimate regulatory constraint in the UK, or is that a cultural kind of mindset constraint?
I think it's a bit of both. I've heard anecdotally that the regulations in the UK extend, for quite a large length of a bookshelf. So I can't claim to know the regulations inside out. But the conversations I've been having recently are a combination of, if we provide advice, for instance, and anything goes wrong, then we're on the hook. And I think that's right. And something which is more subtle about, client data, for instance, being on-premise and versus not. And I think those two can get both confused or blurred. You're not quite sure anymore whether is that the regulation or is that how we feel. So I can't actually pick those two apart, but it's both.
Mm-hmm. What's interesting, and we won't get into it today, but it has come up on the show before, this concept of rules-based versus principles-based regulation, UK being principles-based, US being rules-based. Mm-hmm. There's certainly, I suppose, pros and cons of each. I think we can say with relative certainty that the UK environment is much more supportive of innovation in financial services, banking, fintech. That said, it can be difficult to operate in a principles-based environment because you don't know, effectively, you're never protected retrospectively. So if you do something today that seems perfectly reasonable, and 5 years from now it comes out that the end result wasn't what it should have been, for reasons beyond your understanding at the time, beyond your control, there's certainly concern that that could be construed as falling afoul of regulatory guidelines. If you operate in a rules-based system, while it can be very painstaking to keep up to date with changing rules, at least to an extent, you feel like you can fight your case, defend your case in the event that something should go wrong later if you were, in fact, following the rules. It's an interesting tension. I'll return to the Shazam example just one more time because I think it sets us up nicely for some of the other topics that we're going to discuss. If you had to rebuild Shazam today using modern technologies, would you do anything differently? And if so, what?
That's a good question. I think that the way I see media today is, again, fundamentally different from what it was before. So just thinking about, the experience of entertainment, the opportunities from virtual reality, for instance, or from augmented reality just didn't exist back then. And I think that, if you are in a concert, for instance, and you're hearing the music, but you're also feeding off the crowd, it's the environment, it's not just the music. So similarly, I think, going forward, will be much more kind of immersive experiences rather than just music, or even what we take today as high-end video, for instance, will look really old-fashioned pretty soon. So in terms of building, what would I do differently? I'm not quite sure. What I would do for sure is think ahead to what will things look like in 5 or 10 years and work backwards from that.
No, that's fair enough, and it's probably not a great question, because if you could build it just fine in 2000, there's no reason you should need to rebuild it now. It sounds like effectively two of the core components of Shazam, and indeed of any new proposition that you would build or think about going forward. There's the AI element, so voice recognition, and then the AR or VR component. So how is that experience actually lived? And I think that you're absolutely right that AR, VR will open up create some fundamentally new experiences. I think two of the most interesting augmented reality or mixed reality use cases that have kind of come up lately have been, one, Pokemon Go, and two, more recently, Amazon Go, which I guess you could argue is kind of a blended to an extent digital experience with a physical experience. Mm-hmm. What does banking Go look like? You referenced how experiences in banking financial services still aren't designed to leverage available technologies. What would a modern banking experience look like? Yes.
I think the difference between music and banking is that music is experiential and banking is not. So the buzz that you get from being at a gig, for instance, you're in the moment, you're in the now, and you're experiencing it right there and then. Banking, on the other hand, is exactly the opposite. So if you're saving for your pension, then you're not really living life when you're 65, and that's where the problem comes in. And I think that there's a massive opportunity, even though I'm a big fan of music and, I think it's fantastic that people love music, but there's more to life. And actually your personal finances are arguably more important. So to the extent that technology can bring that to life, make it really sharp and vivid, and then appeal to the emotions, then you can make good decisions and take action on it. And that's what we don't have today. So at the end of the month, you get a bank statement which says, okay, these are the transactions, or here's a credit card statement. And, if you're responsible, you look through that and you absorb it to the best that you can. That is the state of play right now in 2017. We can do so much better than that. And I'm not talking about last month's bank statements, but, life is life. You can look ahead and say, this is how things are going to shape up. People like yourself are on this trajectory. When you get to 65, these are the choices you're going to face. Let me give you a little hand here to try to bring this to life. And what's an example? So if you travel and you buy travel insurance, then that's probably a sensible thing. Now, that's reasonably easy to understand. Some people do not insure themselves when they travel, whether that's deliberately or in many cases just an error. But it's much harder, I think, coping with the bigger financial choices, long-term investment decisions, tax planning, pension planning, etc. What does it feel like to have 3 kids at private school? If you're paying those kinds of school fees, what does that do to your holidays? People don't want to think about those kinds of things. But I think when you can, bring an experience to life, you say, I'm going to fast forward, if you're single, to what does it feel like to have kids? Now what you're going to do about your savings, I think you'd have transformative behavior. And that's something which I really look forward to, because I feel we'll be a much better society when people can make informed financial decisions, rational decisions, with the help of experience which they may not have had personally, but that we've had as a society.
And experiences which they're able to have thanks to immersive technologies like VR, for instance?
That's exactly right. So I think that, so I've got 3 kids. The oldest is 10, the next one is 7, and the youngest is 4. I'm trying to teach my daughter to learn about money and manage money. And it's tricky because, everyone has to go through that process, but I don't feel I have the tools in my hands. The reality is that numbers can be abstract. If you can make it visual or make it real, it's much more likely that those concepts will sink in. Now, that's just simple numbers. When it gets to things like compound interest, the human brain is not wired to think in exponential terms. So it's very difficult to comprehend. And again, you can make that much more real through something which is either graphical or even better, which is immersive. So give you an example. So if you were to take 25 steps in a straight line, you'd have gone, let's say, 25 meters. If you took 25 steps where each step was double in terms of length of the previous step, you'd reach the moon. And if you could put on a VR headset to show that, okay, here's 1 step and here's 2, and then exponentially you'd get to the moon, that child would not forget the importance of compounding and the effects of exponential growth. I don't think it would be that hard to create that. We just don't have it today. So I'm still using old-fashioned methods to try to teach compounding to my child.
No, it's interesting because clearly the use case around financial education of children in this sense, but surely larger swaths of the population as well, are profound. Also, education more broadly. I mean, does it make sense for 20 students to sit in a classroom, all experiencing the same lesson from the same teacher, if almost by definition there are different levels, different learning styles, different kind of points of comprehension?
Exactly.
You could, in theory, tailor learning experiences across the board to the student.
I think that's right. And the problem, I feel, is that financial literacy and financial education is a lifelong process. It's not as if one can get a grip on money and then one's done, because, the rules change. You might lose your job. You might have an unexpected event in the family, which, changes your financial plan. And to be able to continue to learn and keep up with the reality, I think, is something which we all do and have to do one way or the other. To the extent that technology can help us, to the extent that data can inform us, to the extent that other people like us can show us the way, I think we're going to be much better off. And I'm really optimistic about the opportunities in financial services, having seen it in other industries. Again, I think we'll be better off as a society. It's not about making money or being successful. It's about, I think we'll all be better off.
Yeah. No, it's actually really interesting to think about the ways that kind of difference between today and what banking could look like in the future as you're explaining it, because it's almost as if parts of banking that are experiential today shouldn't be, i.e., I don't know, checking your account balance. Why should you need to log on 3 different passwords to look at your balance? Why should you need to deal with a letter that arrives at your home that requires you to go to a branch to deposit a check, when so much of that could happen seamlessly in the background, likely supported by some sort of AI-driven technology, while at the same time making experiential some parts of banking, financial management, financial services through things like AR and VR that aren't currently easy to understand.
I think that's right. I think there's different aspects of this, which is, I think it's bringing to life for a consumer or for an individual things which are not necessarily obvious or not intuitive. And as you very correctly pointed out, there's in-person events which don't need to be. So I walked into the branch of a fast-growing bank, and I said I'd like to open an account, a business account. And they said, fantastic. How many directors to the business would there be? So I said 2. They said, we need to see the other director in person, in branch, in order to do that. And I thought, my goodness, this is precisely the experience I don't want to have. And really, we shouldn't be asked to physically walk into a branch, completely understand the importance of KYC, completely get it. But surely there has to be a better way. But
wow, well, I hope this was either a national bank or a global bank, because what's to say that your a fellow director isn't based in the north of England, based in continental Europe, based in Asia?
Exactly. So I didn't stay in the branch very long, unfortunately. But those are not the kinds of experiences that we're talking about. And to your point.
So getting to the power of AI to transform, let's say, experiences, because there's no reason that we should limit ourselves to financial services. What are the most powerful use cases for AI in terms of transforming our experiences? Is it around things like voice first interactions? Is it around things like chat bots? Is it around things like inbuilt background processes that we currently do but that we won't necessarily need to do in the future? Where do you see AI being most powerful?
AI has been around for about 30 or 40 years, and it tends to go in waves or cycles. And I think we're at the early stage of another really powerful cycle. And I think partly driven by the computational power as well as the data which we have available. The way I see it evolving is starting simple with machine learning and being able to analyze data and come up with patterns which takes the responsibility away from the human being. Because for better or for worse, we use mathematical models in everything that we do. So we simplify things, we try to abstract from reality. But those models may or may not be correct. And if they're flawed, then you get problems like the pollsters not being able to call the elections. Now consistently they're getting them wrong. But where I see it is machines being able to detect patterns which we didn't even know existed and to play those back. And that starts to help nudge decisions and behavior. So it's difficult to answer the question in sort of completely generic terms. I think in financial services, one makes a series of decisions. So do I save the pound or spend the pound? Do I borrow £10 or use my savings and so forth? And being able to bring help based on data, I think will be really useful. In a different context, so for instance, in entertainment or other industries, I think it'll take a completely different shape. So a classic one about Netflix spending $1 million prize to have an algorithm which could provide movie recommendations. And so if you like certain movies, what's the next one? And that got to a plateau where they found that they couldn't get it much better than it already was. So an example is music. What should I listen to now? You've got lists on Spotify, but they're curated, but they tend to be static. So as the day progresses, your mood changes as the day goes, but it's not dynamic. Well, why not? There should be a dynamic music recommendation based on your previous history, as well as if it's raining today, the music will be different than if the sun's shining. It's not that hard. We will have it, but we'll get there.
That's a great point. And I mean, even the Netflix recommendation engine often pointed to as a great implementation of predictive AI. But I mean, it seems to an extent like they've sidestepped this problem of precise recommendation by just splashing dozens, if not hundreds of movie options or TV show options on the screen at the same time, which is often painful to pick through to actually find one that you like. Not least because if you want to find something, it can be difficult, but also because of some of these human behavioral components that you're talking about. For instance, in this case, decision fatigue. It would be much easier if 2 or 3 really great recommendations showed up than 100 to some degree mediocre to good, which then places great strain on the user to actually sift through and decide around.
Yes.
A lot of the really powerful use cases that you're talking about would fundamentally improve people's financial education, financial well-being at the expense of banks. Banks in the UK, which is the market that I'm currently most familiar with, make a large portion of their retail revenues on fees and charges for people that misuse or mismanage their finances. They overdraw on their current account and are required to pay a fee, or they bounce a check. A lot of these techniques to improve people's financial well-being would erode banks' revenues in these areas. I think there's definitely a tension between banks and customers. And in fact, personally, it's one of the biggest complaints that I have about the incumbent banking system in developed markets. How would you think about that tension?
No, I think that's interesting. And again, I think there's an element of legacy about how banks make money. And I think there's no point looking backwards. If one looks ahead and you say, how does one create a good business model? If it aligns with the customer's interest, it just makes perfect sense. If the customer's better off and the provider or the financial institution is better off, then that's a well-designed business model. And I've got no doubt at all that we'll be moving towards, we as a financial institution help make you successful as a customer, and therefore you reward us, you love us, you stick with us. And I think institutions which don't follow that principle will fall behind, pretty quickly.
Yeah, I totally agree there. And I think that will inevitably happen, hopefully sooner rather than later, because currently, looking around the market, we have banks with unsustainable business models, I would argue. Cost structures that are too high to sustain given revenues that these banks are generating, especially in a low interest rate environment, especially in an increasingly competitive environment with a growing number of FinTech offerings seeking to offer similar products and services at lower costs. What has to happen is that banks get their costs under control, not by, I would argue, cost cutting, but by fundamentally restructuring their ways of operating. Switching gears slightly, you work for a bank. How can you and your industry colleagues leverage the technologies that we've been talking about? Unlike the Facebooks, Googles, Amazons of the world, banks aren't building cutting-edge theoretical tech R&D labs. They're not hiring computer science departments out of leading technical universities. How do you access, test, deploy, and expand offerings that leverage these new technologies? Is it collaboration with startups? Does that even work in practice? Or do you just have to wait until IBM or Microsoft develop these technologies so you can then integrate them from trusted legacy, quote unquote, suppliers?
Yeah, I think it's about learning about new technologies. it's really dramatic how much more accessible, software development is. I was visiting schools for my 10-year-old, and I saw 13-year-olds programming in Python, and they're not, highly technical. I think all of us have an opportunity to learn about what the future will look like. And whether it is with the maker movement, whether it's with Raspberry Pi, whether it's with Arduino, it's just about experiencing firsthand what the possibilities are, keeping in mind that, kids can do this. And then say, all right, well, what could we build if we hired some smart people or we used our imagination? And that doesn't need to be expensive. I don't think it needs to be highly risky. I think, on the contrary, if one is innovating, then one should have lots of ideas, and some things just won't work, and that's okay. And I'm not saying for a second that one should compromise either security or customer information or the regulation. It's more about what are the kinds of experiences and the kinds of interfaces which will get customers excited and provide something which will change how we interact with the financial institution. And so I would say for bank management, for incumbents, playing with those ideas, trying out the technology, interacting with young people who take it for granted, having fun with imagining the possibilities, and then, making some decisions and then building it robustly. Again, that's well within reach. This is not science fiction stuff.
If you were to blink your eyes and suddenly find yourself head of innovation at an incumbent bank that was dealing with legacy, culture, and IT issues, and that was interested in progressing to a future state along the lines of what we've discussed today, where would you start? How would you drive that sort of progress in the right direction?
So I would find a group of people who didn't know much about money and had their lives ahead of them. So I would guess 14-year-olds. I would explain to them that this is what they will be thinking about their money and how it works. And I'd ask them to design what makes sense if that's the problem they were trying to solve. So they might not know what it means like to take out a mortgage, but I could explain that and say, how would you go about doing that? And I'd see what comes back. Because I'm sure what would come back is completely different from the way we're set up today. And I'm also sure that we'd get ideas which we'd never even thought about because, our heads are so full of information about how it's done today and how the cost structure works and how you make money. So it's impossible to flush that out. So I'd get a group of people who didn't have those preconceived notions and do that for a period of 2 or 3 months with lots of different inputs. And I think what comes out of that, one could build within 18 months and be completely different from what's out there without a huge investment.
And how difficult is it then to retire some of those expensive legacy systems which have required so much investment in upkeep over time and which represent sunk costs, but nonetheless psychologically difficult costs or systems to cut and do away with?
I think legacy systems are relied upon because banks are running on those systems today. So it's a difficult one to just abandon them. But I think it would be really easy to make a transition once there's an alternative which is up and running. It doesn't need to be at full scale. That if you don't have a plan B, you're not going to step away from plan A. So I'm not saying for a second it's easy. I'm not pointing fingers at anyone. I just think it is easy to create a plan B today in the technologies which we have today, the opportunities for development which we have today, and then say, oh, I can switch off plan A without losing sleep over it.
Dhiraj, what's the best way for people to connect with you directly and find out more about your work?
I'm on Twitter. You can find me at Dhiraj. I'm on LinkedIn as well. And yes, look forward to continuing the discussion online.
Dhiraj Mukherjee, thank you very much for joining us today.
My pleasure. Thank you so much, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.